Hello and welcome to Season 6 of NSE FinWiz, powered by CNBC TV 18. I'm your host, Mridu Bhandari. In Season 6 of the series, we're exploring the theme, Invest in Yourself, Your Path to Prosperity. And today, we're taking you to the Tech Mahindra campus in Noida, this multi-billion-dollar IT giant that has put India firmly on the world map. Our financial experts are all set to engage with the young employees at TechM and give them some valuable money mantras.
3 दशकों से अधिक समय से टेक महिंद्रा सूचना प्रौद्योगिकी के क्षेत्र में एक अग्रणी भारतीय बहुराष्ट्रीय कंपनी है, जो कंपनियों के लिए नेटवर्किंग टेक्नोलॉजी सॉल्यूशंस और बिजनेस प्रोसेस आउटसोर्सिंग प्रदान करती है। महिंद्रा समूह का हिस्सा टेक महिंद्रा US $4.7 बिलियन कंपनी है, जिसमें 1 लाख से अधिक कर्मचारी 90 देशों में कार्यरत हैं। और आज NSE FinWiz अपनी थीम इन्वेस्ट इन योरसेल्फ, योर पाथ टू प्रॉस्पेरिटी के साथ नोएडा के टेक महिंद्रा के कर्मचारियों के साथ उनके वित्त योजनाओं पर उनकी धारणाओं को समझा और उन्हें वित्त प्रबंधन की बेहतर योजना बनाने के लिए शिक्षित किया।
Financial literacy, as the word says, that it's about being literate about how much you know about financial, how much you know about your money, because you know that it's your money and how to use that in a beneficial and in a more optimized way. It's the best thing which we can learn.
Financial literacy, as the word already suggests, it's about knowledge, being literate about what are your financial aspects, the financial markets. First of all, before anything else, we need to know about what are the financial markets, what are the trending financial options that we have today, and as the young force, we need to understand what are the options available to us to maximize our returns.
Financial literacy is sort of having the knowledge or a tool wherein a person is informed about how the money works in this world, right? It's very especially critical in today's scenario wherein, so much information is around. I believe it should not just be limited to investors, but to all the stratas of the society, be it the low income group people, be it the millennials, be it the investors.
We usually don't look into the financial sector and how the management is to be done on the financial grounds. So basically, I think we'll get a complete insight of how we need to manage our money and the wealth and where the investment is to be done.
Welcome to NSE FinWiz, powered by CNBC TV 18. Today, we are coming to you from the Tech Mahindra campus in Noida, and our set of financial experts is here to engage with the young employees and give them some valuable tips on managing their wealth. Let's welcome the experts on the show today. Lovaii Navlakhi, founder and CEO of International Money Matters, and Tanveer Alam, CEO of FinCut. Welcome, gentlemen. Gentlemen, invest in yourself, your path to prosperity. That is the theme that NSE FinWiz is following this year. So, Lovaii, perhaps I'd like to open the session by asking you, how do you really bucket goals with respect to short-term prosperity, medium-term prosperity, and long-term prosperity, and how do you link those with finances?
If you look at what individuals really want in life, there would be different things that they want. At the start of their career, they just want some good money to blow up on weekends, have a party, go to the mall, buy the latest gadgets. And there would be times when they want to invest back for higher studies for themselves, for marriage, then for kids, and so on and so forth. So invariably what happens is when you start off and you don't really have a planner and you've not thought through about finances, you tend to go in sequence and you tend to take the first thing that's coming up and pay all your attention to that, then go to the next and then to the next. Yeah. However, if you were to ask people what their priorities were, the priorities may not be in the same order. So while we use, financial planners tend to use long-term, medium-term, short-term. If we forget that jargon, we just think of what is the priority for that individual. Right. The prioritization becomes very critical. So once we have the priorities right, then we can sort of plan how that prosperity can get reached.
Okay. Tanveer, let's pick up long-term prosperity first. And the route that you all always suggest is equity. Why do you do that? And what are the do's and don'ts of investing in equity?
So when you're looking at a long-term goals, you have to use the most efficient vehicle that will help you reach in optimum time. And that long-term investment vehicle for your long-term goal is an equity mutual fund. Yes, surely you can use any other fixed income product as well. But is that efficient? that may not be efficient. So even if you use a fixed income product like a fixed deposit or any other product which is giving you a fixed assured return, it surely will help you reach to your goal, long-term goals also, but may not be as efficient. And hence, choosing an equity mutual fund for our long-term goals is an optimum way of actually investing.
Okay, Lovaii, do you want to take us through the power of compounding? That's an important tool as far as achieving prosperity is concerned. How does it really work? And why is SIP considered to be a good route today for investing?
The idea of an SIP is primarily to reduce the risk, to average the entry levels at which you are investing. Because as long as the trend is going to be upward on the equity markets, you are ensuring that you are entering at different points in time. Because it's very difficult for you to predict whether the highest point was yesterday or the highest point is going to be tomorrow. So if you average out your entry points of investing, you are reducing your risk because you're not putting all your eggs in one basket at one point in time. So you're sort of staggering that. The other more important thing, as Mridu spoke about, is compounding, which is that money gets you returns, and then those returns in turn get you even more returns. And there are enough and more data points available which will tell you that if you just postpone your investing decision by a couple of years or 3 years, you'll be way off your target as compared to someone who has started a few years ahead of you. So the sooner you start, the better it is because you have more time in the market for that money to flourish and grow.
Right. You know, for first-time investors, I think the biggest confusion is how much to save and where to put that money. So what's a good percentage of income to save on a monthly basis? And secondly, how do you go about building a portfolio? What are the essentials, 2 or 3 top essentials that you must have in your portfolio, Tanveer?
Indian savings ratio is about 30%. So ideally, it should be anything around that. So if you're still saving about 25%, that's a good number to start with, okay? So what you could actually allocate, if you can break your 100 rupees, 50% going to household expenses, your roti kapda makan, 25% for your savings, and the rest 25% can go take care of your lifestyle expenditure. Okay, that is the good way to actually break that out. Now, the second part of the question, she said, what are the essentials of building a good quality portfolio? So I will give a small pyramid kind of a thing, which is acronymed as ERGRE. Okay, if you tell from either way. E is first emergency fund. It should be a minimum 6 months of your monthly income that you set aside as your emergency fund. The R stands for risk protection. And the risk protections are buying a health insurance cover. If you have responsibilities, an online good term insurance is certainly important for you. The first 2 ER helps you to protect whatever you earned. Then G is your goal planning, setting aside like prioritized goal based on short, medium and long term, and there is a rationale behind it. R is for retirement, and especially I've kept it separate because that's the most important goal and often overlooked because behaviorally, anything that is very far-sighted, we tend to avoid it. And last E is estate planning. The first 2 protects your wealth, next 2 grows your wealth, and third is seamlessly transferring wealth to loved ones.
Okay. On that note, we are going to head into a short break right now. On the other side, our experts will continue to engage with the employees of Tech Mahindra at Noida. Stay with us only on CNBC TV 18. Welcome back. You are watching Season 6 of NSE Fin Wiz, powered by CNBC TV 18. And today we are coming to you from the Tech Mahindra campus in Noida. Our core topic for discussion today is insuring life as well as medical insurance. Why is it important to have insurance? Gentlemen, let's talk first about life insurance. Why is it important to have a life insurance plan? What sort of a plan should young people be opting for? Lovaii, would you like to start?
You know, if you are contributing a certain sum of money every month to for your family and for their well-being, what you want to make sure is, so if I am contributing 50,000 rupees a month for my family's well-being, then in case I pass away, then I want to make sure that that sum of money is going to continue be available to my family. So you have to think of it like an ATM being available for them, where 50,000 rupees a month is coming to them every month. So for that, the only way I can ensure that, either I have lots of assets, which is going to generate that, and I don't need those assets for anything else. Otherwise, I need to buy life insurance. And that life insurance, roughly, if you take a very, very simple sort of calculation of 6% return that you might get, is 200 times that amount. So for 50,000 rupees a month, I need to buy a 1 crore term insurance product, which will ensure that at 6%, that's going to be 6 lakhs per annum and 50,000 rupees a month. So that's a bare amount of term insurance that one needs to buy. And that's just taking care of today's expenditure. You might want to add to that inflation, and then you might need to think about other goals as well, but this is absolutely bare minimum.
Absolutely bare minimum. All right. Let's take up some questions from the employees of Tech Mahindra, and these are the prosperity goals they've shared with us. The first one is Omnish Singhal, Associate Software Engineer, asks, in the initial years of earning, when you don't have any dependencies, how important is it to go for a term plan?
Taking a term insurance at an early stage is extremely beneficial. Now, for example, if you are less than 30, at 1 crore term insurance will cost you about 8 to 10,000 bucks. 10,000 rupees also, if I put it for 40 years, is 4 lakh rupees you're investing. Suppose you don't delay that exercise and you buy insurance when you're 40. First of all, if you're not in good health, you might not get. Now, even if you get, the same 1 crore policy comes to you at approximately 24,000 rupees premium. You technically paid almost double for the same cover, because term insurance premium remains constant throughout the life. Term insurance is basically that income replacement for your family. Hence, it is very much advisable to have a good term insurance at an early stage of your life.
Okay, the next question is from Pratiksha Pathak, Senior PMO Coordinator here at Tech Mahindra Noida. And the question is, does any insurance cover all the parameters as per practical occurrence, or are they always misleading and hypothetical?
Term insurance, to be very honest, if you're looking at purely term insurance, it's bought in good faith. If you have anything before 2 years, it's called early period of claim. There are a lot of scrutiny and investigation will happen. If you have a claim thereafter, there is nothing to worry about, because even suicide is covered after 1 year. You have to ensure that you honestly disclose your medical conditions very, very honestly. It is given on good faith. But having said that, few of the indicators, thing that you need to look at is your claim settlement ratio, apart from the premium. Second is the time to claim settlement ratio. How long does that company take to settle the claim? These are two critical things which you look at before actually buying a term insurance policy.
Right. Okay. Let's also talk a little bit about medical insurance, and why is it essential to have your own independent medical insurance policy, perhaps individually as well as have a family floater plan?
Yeah, so I think it's critical for you to take a medical insurance policy of your own as quickly as possible, and for the maximum amount as possible. So you have to imagine how much of a medical claim that you might make for an illness which you think could happen, or you've seen happen to somebody else, and then take into account inflation for the next, at least for the period of your rest of your working life. And then take that amount of cover. Now, if you try to take that cover individually, it might turn out to be expensive for you. So then there are options of taking floater policies and top-up policies by which your budget and your cover you can match. So that's probably one of the reasons why you might like to go to an expert who will be able to break this down for you and give you the same amount of cover in the budget that you want. So extremely important, because you are not likely to be in the same company forever, A. B, I've had situations and clients where they have moved to another company where they are going to be covered from day one. But they took a 2-week break between the two companies and there was a medical claim in that period. That was not covered. So you'll have situations like this and you can't predict all of them. So it's better that you have your own medical insurance policy the sooner and the earlier as you can, because pre-existing illnesses, etc., then get excluded. So the more you delay it, there's a possibility you have some illness and they'll say, yes, we'll cover you, but for this particular illness, no, you won't get a cover, or there's a postponement of that cover.
All right. Thank you very much for that very sound advice, gentlemen. At this point in time, we'll take another quick break on the show. On the other side, it'll be an open house with the employees of Tech Mahindra here at Noida. And in the meantime, do remember you can log on to our website, nseffinwiz.com, for more financial advice. And also feel free to reach out to us using social media. Our handle on Facebook and on Twitter is NSE FinWiz. Stay with us on CNBC TV 18. Welcome back to Season 6 of NSE FinWiz, powered by CNBC TV 18. Today, we are coming to you from the Tech Mahindra campus in Noida. And in this segment, our financial experts will be taking questions from the employees of the company. So if any of you have a question, kindly raise your hand. Okay, there's a question right there at the back. Can we have the mic for the gentleman, please?
In the past 2 decades or so, we have got a lot of mutual funds running in our country. Why haven't we got any kind of hedge funds in the financial market of our country?
We as a market has not matured to take that kind of money into a risk fund. Now, having said that, a hedge fund is a very high risk, high return kind of a product. So it is for a very evolved set of investors who are willing to take a high degree of risk and a concentrated bet in a particular sector or particular theme and create wealth. So that is the prime reason why India does not have fund. Secondly, if you look at RBI and SEBI has played a very significant role in trying to create a good, healthy mutual fund or a investment environment in the country. And they are afraid to open up to such degree of risky products to India because it may not suit the risk appetite of the broader people who are trying to invest in this product.
If I can add, a hedge fund essentially allows you to buy, sell short, whereas most other products over here are what we call long-only products that we are only buying. We decide we are investing in equity, that will buy equity. So a hedge type of product is available through what is called the AIF route, that is alternate investment funds. So there are alternate investment funds which have a long-short strategy, but the minimum investment amount there is 1 crore. And the reason for that is, what Tanvir said, is that we don't expect retail investors to understand the product. So complex products are open only for investors who have larger sums of money to invest and therefore are willing to take that type of risk. So they do exist in some form, but it's for limited use only.
Right. Any other questions?
I have made a SIP investment of 2,000 monthly, and one of the bank executives advised me the more less value it goes in the near future, the more profit you will gain in the latter future. So the accumulated value has already gone down from what I had invested. What is the time when we should actually stop investing in the same SIP to look at as a risk?
SIP, I would want you to continue for life if I can. In equity market, you do not create wealth over a short period of time. We spoke about power of compounding. Power of compounding works efficiently for time horizon 5 years and more. The longer term the term horizon, the more better it is. It looks like magic. But for time horizon less than 5 years, that power of compounding does not effectively work. One, you should have a long-term focus, okay? Secondly, what happens is, if you look at the Indian stock market, it works like a staircase. You'll have a period where it is a flat market, then it jumps, it remains flat, it jumps again. So you will have a time when you'll keep accumulating your units at a lower level, keep accumulating and be ready for the takeoff. Do not stop your SIP. You should be ready with maximum number of units when the takeoff happens to create wealth.
Okay, another question right behind her. Please have the mic there.
How do you look as the NPS if I look it as an investment option?
NPS is a great option to invest because especially for people with higher sort of tax brackets, if they opt to get 10% of their basic paid off to NPS, there's unlimited sort of tax benefit. Over and above that, under Section 80C, where you get 1.5 lakh benefit, you can add another 50,000 to the NPS, so you get an additional tax benefit by investing in the NPS. NPS, the way it runs right now, there are 8 fund managers, and you have to choose the fund manager. You have an option to change that fund manager twice in a year. and you can choose how you want to distribute your money between equity, debt, and government bonds. So you have a chance to build a long-term sort of portfolio as opposed to, let's say, provident fund, where almost all the money goes into debt products. Whereas here you have the option to invest in even equity products and grow your money. So it's a good option. The cost of that scheme or running the scheme are very, very low. So the chances of you making more returns sort of improve because you are into a product which is cheap.
All right. Thank you very much, everyone, for being such a participative audience and having us here on your campus at Tech Mahindra Noida. Thank you very much, gentlemen, for taking out time to be here today. With that, it's a wrap of this episode of NSE FinWiz, powered by CNBC TV 18. As Warren Buffett once very wisely said, risk comes from not knowing what you're doing. So hope these insights help you and take you forward on your prosperity path. Thank you for joining us. Goodbye.
It's been very insightful. The importance of financial discipline and investment discipline, we all know about it, but the fact is we tend to forget sometime, and that's what has put me back into the same mold, and I intend to do that again.
It was very helpful, and I would encourage that the companies to host these kind of events more frequently because it gives more education to a young investor as me and to the other fellow employees.
The session was quite knowledgeable. I mean, I had no idea about the stock exchange. I was actually afraid to make any investments. But today, after this session, I'm sure I'll be making some good investments.